Bill Gates has been selling his stocks to get ready for quite possibly one of the most terrible economic disasters in history. Gates is known for being a CEO, but he's even far superior at capital growth. Through the assistance of his fund manager, Michael Larson, Gates figured out how to make $50 billion over 20 years. Gates and Larson made billions when the bull run, but also effectively prepared for the dot-com bubble in the 2008 recession. This has permitted him to reliably beat the S&P 500 and grow his wealth to newer heights. Gates and Larson are now aggressively getting ready for what will become one of the most terrible recessions of all time. Welcome to Bulls and Bears. If you're new to the channel, hit the like button and subscribe if you enjoy our content. Now, let's go back to the video. It is a well-known fact that the economy is in a tough position. The US economy is going through accelerating inflation, the lowest consumer sentiment ever, the Russia-Ukraine war, low customer savings rates, and record-high debt levels. The government infused trillions of dollars into the economy in 2021. 2022 is the direct opposite of that, with the government pulling back trillions of dollars out of the economy. Gates is particularly worried about the artificial trap that the Fed made for itself. The economy is being pummeled by a double-edged sword right now. One edge of the sword is speeding up inflation, and the other edge is the huge level of government debt. The government currently has two options: to annihilate the US dollar or crash the economy at the risk of popping the debt bubble. The Fed has chosen to go with the second option of slowing down the economy at the risk of an unprecedented collapse. We recently saw the Fed raise interest rates by 75 basis points, which is the biggest increase since 1994. This increase helps significantly with slowing inflation. However, it comes at a significant risk. Firstly, raising rates sharply implies that borrowing will cost a lot more for business investments and mortgages. Rates on the 30-year fixed-rate mortgage recently increased by the biggest one-week jump in 35 years. If this increase in interest rates slows the economy too much, it could pop the current debt bubble and spiral the economy into a recession or depression. The bear proposition that Gates discussed in one of his interviews seems to make complete sense. A surge in oil prices is strongly related to recessions. Each time Brent crude oil crosses $100 per barrel, a recession almost always follows. Brent crude oil is currently at around $120 per barrel. It is signaling that a recession is coming. The reason why a recession almost always follows oil costs breaking $100 is because rising oil costs are a tax against the consumers. High gas prices take cash directly from the consumer's pocket. This not just leaves the customer with less cash to spend, but it also drastically brings down consumer sentiment. The University of Michigan Consumer Sentiment Index shows that consumer sentiment is presently the lowest it has been since the 2008 recession. In anticipation of a collapse in the US stock market, Gates and Larson have been using an assortment of hedging strategies. One of these strategies incorporates shorting stocks. Unlike long positions, short positions don't need to be unveiled to the public. The SEC is attempting to change this with a new proposal. However, until that goes through, we have no clue about what stocks Gates is really shorting. With that being said, we know that Gates has a short position against Tesla stock because Elon affirmed it himself. Gates promotes himself as a solid ally for sustainable technologies. However, Musk believes that his Tesla short position goes against this. Musk said in a tweet, "Since Gates still has a multi-billion-dollar short position against Tesla, while claiming to help with global warming, I guess I have some trust issues with him too." Gates is presently down by around $1 billion on his Tesla short position. However, he obviously currently hasn't closed out his position. Elon discussed how it was $500 million. However, Tesla went up a lot. So presently, it's $1.5 billion to $2 billion to close it out. Gates and Musk were going to meet to discuss philanthropy, but leaked messages show that Gates' Tesla short position hindered the meeting from happening. Though Tesla stock experienced significant price appreciation in 2021, the highest point of the bubble was the rise of the NFTs. While there is long-term potential for the Ethereum platform, there's no obvious reason for pictures of chimps to be trading for a huge amount of dollars. At the time that I'm recording this video, the S&P 500 is still more than 15% higher than its pre-pandemic pinnacle. Gates sees no reason for that to be the situation. The economy was a lot stronger before the pandemic hit. Consumer activity was booming, and the inventory side was booming as well. The pandemic genuinely affects both consumers and suppliers. Cash printing can't boost economic activity back to the pre-pandemic levels. The financial effect of the pandemic is still being felt today. In addition to the financial landscape being delicate, Gates likewise doesn't completely accept that the pandemic is over. Gates let the Financial Times know that we are still at the risk of this pandemic, generating a variant that would be even more transmissive and even more fatal. He further explained by stating, "It's not likely. I don't want to be a voice of doom and gloom, but it's way above a 5% risk at this pandemic. We haven't seen the worst of it. So in addition to the fact that we have high inflation and liabilities, we also have a pandemic that might still get worse." These elements combined put the US in danger of a terrifying economic and social crisis. Gates referenced useful assets as his specialty with regard to investing, but he really has been selling his assets. His latest quarterly filing for the first quarter of 2022 uncovered that he sold a huge number of shares in different organizations. This included over $1.3 billion of Berkshire Hathaway, more than $500 million of Caterpillar, and a huge array of other stocks. To comprehend the reason why Gates is selling his stocks, we need to jump into Michael Larson's methodology. Larson is the mind behind the operation. He knows precisely how to maximize alpha, which is referred to in the investment world as the risk-adjusted return. While the market crashed immensely during the 2008 recession, Gates experienced a tiny decrease in his total assets as per the sources that were close to him. Although Larson's methodology has stayed mysterious, we know from public filings that he reflects Buffett's investment strategy. If we investigate the holdings in Gates' portfolio, we can see how the vast majority of the organizations wouldn't be affected by economic fluctuations. One case of this is Waste Management stock, of which Gates possesses $3 billion. No one will quit unloading their waste because the stock market is down by half. Another part of Larson's methodology incorporates diversifying into other asset classes. Gates is the biggest U.S. private owner of farmland for two reasons: high alpha and diversification. Farmland averaged a return of more than 11% from 1991 to 2018, with not a solitary year being negative. This is because during a recession, individuals won't quit eating food. This permits farmland to have a high alpha, since it delivers significant yields with practically no downside. Larson is likewise known for investing in alternative assets. For example, private equity, which includes buying out privately owned businesses. Like farmland, private equity is an area that is not accessible to retail investors like you and me. However, for Gates, private equity is an incredible method for hedging his portfolio further through diversification. Upon hearing all of this, are you planning to sell your stocks like Gates? Why or why not? Let me know in the comments below. If you enjoyed this video, hit that subscribe button, click on the notification bell to be updated on our new videos. See you in our next video!